Hello everyone, it's Max with Crypto Talk now. So Ethereum, it's about to drop below the $1,000 mark. And with that said, it may very well go down to 850. Now is 850 going to be the rock bottom for Ethereum? Well, this article basically thinks just that. So let's take a look at this real quick. So it mentions right here that Ethereum sell-off resumes with ETH price risking another 25% decline in June. At the time of making this video, it's already June 17th, so there's not that much time left in this month anyway. Ether price is forming a bear pennant pattern whose profit target comes to be near 850. Now, of course, they're going to have some analysis that's going to back this up, and we'll get to that just in a bit. For instance, Ethereum slumped on June 16th, suggesting that its relief rally, coinciding with the Federal Reserve announcing it will hike the benchmark rate by 0.75%, is at risk. So, what does this mean? Does this mean that the Ethereum bulls are trapped? It goes on to mention Ether's price slipped by what? 9.2% to around 1120 per token a day after it rebounded by 23% after dropping to almost 1,000. Basically, this is the worst it's been for Ethereum since January 2021. The ETH USD pair's upside move, followed by a sharp correction, appeared in tandem with US stocks confirming that it traded like a risk asset. And basically, when you look at this, it shows just that. It goes on to mention the decline means that Ether has shed 77% of its value since November 2021 and is now trading below its realized price of 1740, according to what Glassnode shows. Here's that graph on Glassnode, and yeah, it's pretty crazy what's going on. Furthermore, it states that a higher interest rate environment adds more selling pressure, which we know, with investors leaving high-risk trades and seeking safety in traditional hedging assets such as cash. If you ever watch our show, Larry's always talking about that. What is he dollar cost averaging in? Cash. What's he investing in? Cash. Because he wants to have cash later on if this thing goes even further down. And not just Ethereum, just crypto in general. Alright, so again, it states investors' faith in cryptocurrencies has eroded following, of course, as we know, the collapse of Luna, which is now Luna Classic. On top of that, you have this statement right here. Three Arrow Capital, which is a crypto hedge fund, they oversaw nearly $10 billion in May 2022, which reportedly faces insolvency risk. They state that their fears about systematic risk have further limited the crypto market's recovery bias, which hurts Ether. Well, it's not just that. I mean, a lot of projects are hurt, but specifically this. And since it's basically, the number 2 coin out there, it's the main altcoin, I should say. They have made this statement that 3AC, well, they as in Market Mediations made the statement that 3AC, 250 million in ETH position will be liquidated at 1,000. Furthermore, it states, from a technical perspective, Ether's recent gains look like a bear market rally, which could be due to investors covering their short trades. Covering the short trades as in what? Please refer to this right here. Furthermore, in detail, investors close their short positions by buying the underlying asset back on the market, typically at a price less than the one at the time of borrowing, and returning them to the lender. That prompts the asset to rally between large downside moves, but it does not signify a bullish reversal. Just a little bit more in regards to this. These minor rallies could be a bull trap for investors that mistakenly see the rebound as a sign of bottoming out. On the other hand, like it mentions, experienced bears utilize the pump to open the new short positions at the local price top, knowing nothing has fundamentally changed about the market. And of course, in regards to this bear pennant, They hint at more losses ahead, but their statement of 850 is going to make sense here in just a bit. So for instance, it says bear pants or bearish continuation patterns that form as the price consolidates inside a triangle-shaped structure after a strong downside move. As a rule of technical analysis, traders measure a bear pennant's profit target by subtracting the breakdown point from the height of the previous decline. They call it a flagpole, as shown here. And it's basically right here. And they call that a little pennant. Literally looks like a pennant. Alright. In closing, it says this puts the new bear target for ETH price at what? $850, down 25% from June 16th's price. And of course, June 16th was just yesterday. So how do you guys feel about this? Do you feel as though Ethereum is going to bottom out at 850? Or do you feel as though it's going to be more than that, like 500 and so on? Please drop a comment. We would love to hear what you guys think in that regard. I personally think that it could go down to 500, but what they posted here on Cointelegraph to me makes a lot of sense. So hope you guys enjoyed today's video. I know it was a lot of reading from verbatim, but when it comes to the technical analysis, I feel as though sometimes that's needed. So with that said, everybody, like, comment, subscribe if you haven't done so already. Check out our live show, The Max and Larry Show, Monday through Friday, 9 p.m. Eastern, 6 p.m. Pacific, and also on the weekends, 3 p.m. Eastern, noon Pacific. I'm Max on behalf of Crypto Talk Now. May you all have a blessed day, and we'll see you on the next one.